I want to give you the most important laws of success for small business accounting. So, if you are a small business owner, or let's say you are trying to really do accounting for small businesses, here are the laws of success you need to really familiarize yourself with. Okay, let me first give you the foundation before we get into the nitty gritty. So, the thing is that accounting, as you know, is an instrumental part of running a small business or even a larger enterprise for that matter. Okay, so what happens here is that implementing systems and best practices for keeping track of expenditures and revenues is actually key to managing cash flow. So what happens is you have cash inflows and cash outflows, and at the end of the month or the quarter or the year, you have your net cash situation. Okay, and the whole idea here is to have a positive net cash flow. So if you don't have the proper systems in place, what happens here is that you're not going to have the ability to track funds or create the financial records necessary to file taxes and apply for small business financing. So that's why, again, the laws of success for small business accounting are critical for all kinds of industries. Okay, so if necessary, proper accounting can really change and boost your revenue, can boost your sales if you are able to really find the data and also analyze the data that your business accounting is giving you. So, accounting is crucial for small businesses to effectively manage their finances. And setting up accounting systems involves opening a bank account, among other things. You got to choose a proper accounting method, set up a chart of accounts, and determining the right fiscal year for you. I'll explain later on what those really mean so that you have a clear idea how to really go about those whole processes. Now, basic bookkeeping includes tracking expenses, recording transactions accurately, documenting receipts, and reconciling bank statements. Please do not confuse bookkeeping with small business accounting. Those are two separate, I mean, they're all related processes, but they are also separate. Financial statements, for instance, you only have them in accounting, you don't have them in bookkeeping. Those statements provide insights into your small business's financial health, okay? And small businesses, all kinds of small businesses, need to understand their tax obligations, track deductible expenses, and file taxes on time. So let me talk to you about the laws of success here. What are the laws of success for small business accounting? The first thing you want to do here is to open a small business bank account. If you are going to be successful in business accounting, everything starts with the foundation, the business account. Do not record business transactions in your personal account. Okay, so if you're listening to me right now, if you have a personal account, you want to go to your bank, or you want to go to your credit union, or you want to go to wherever you have your account, and ask to open a business bank account. These days, you don't even have to go to a branch. You have what's called the online banks, the fintechs. So you can actually open a bank account, a business bank account online at a company such as Bluevine, for instance. I mean, there are many, but yeah, I'm just giving you an example. So you want to start with having a business bank account so you can segregate your financial affairs from your personal affairs. So opening a business bank account allows you to separate business and personal spending, which can be really helpful when it's time to file taxes if you plan to deduct eligible expenses. And so to open a bank account for your small business, you'll generally need to have the following. You need to have an EIN, so your employer identification number, or your social security number, okay? You need to have business formation documents, ownership agreements, and in some cases, depending on the industry you're in, you might need to have a business license, especially if your state requires to have one if you want to do business. Now, you may also need a minimum opening deposit if the bank or credit union requires one. Minimum deposit requirements can depend on the type of business account and whether you are opening the account at a traditional bank, a credit union, or online bank. So it's all about the financial institution where you are opening the account. So remember to always compare the fees, features, and benefits associated with different business bank accounts to find the one that really best aligns with your needs. And your needs are going to determine the account you go for. But please make sure that you read the fine prints too, because the last thing you want is to really sign an agreement and you don't like what you have at the end. The second law of success for a small business accounting: after opening a small business bank account, you want to choose an accounting method. An accounting method is really quite essential, not because it's going to help you structure your accounting and bookkeeping going forward. It's also it will really position your business when it comes to compliance. Okay, when it comes to accounting methods, you do have two. I'll go through. I'll detail the two later on, but you have two. You have the cash method and you have the accrual method. One of them is actually in compliance. It is compliant with United States generally accepted accounting principles, US GAAP, and IFRS, which is the equivalent, the international equivalent of US GAAP. So only the accrual method is compliant. Okay, so if you want to comply with US GAAP, you want to choose the accrual method. Otherwise, you can just go with the cash method. Now, the cash method is simpler, it's easier. Now, your accounting method, that's important to remember. Your accounting method determines how you report income and deduct expenses for the year. And the IRS allows you to choose between two options. Those two options, cash and accrual. And not just the IRS, also your state tax authorities, if you are going to file state taxes, business state taxes. So when you think about the cash method, you have a pretty straightforward process. With that method, you report income in the year that you receive it and deduct expenses in the year they are paid. Nothing really complicated. There's no deferred item. So that's for the cash method. But the cash method does not comply with US GAAP. And then you have the accrual method. So with the accrual method, you would report income in the year that you earn it, regardless of when it's received. It's the same thing for the expense. So you would report expense in the year that you actually incur it, regardless of when you're paying it. So if you select one accounting method and then decide that you would like to change it after filing your taxes, you would need to complete IRS Form 3115 to formally do so. So it's important to choose the right accounting method, because if you have to really switch later on, there are actually additional procedures. The fourth law of success for small business accounting I want you to really pay attention to, it's actually has to do with the chart of accounts. So you want to set up a chart of accounts. So law of success number 1, open a small business bank account. Law of success number 2, choose an accounting method. Law of success number 3, you want to set up a chart of accounts. So what is a chart of accounts? So let me just paint the whole picture for you pretty easily. A chart of accounts is basically a list of all accounts available for recording transactions in your accounting software program if you use one, or a general ledger if you don't. Okay, so if you are, let's say, so a chart of accounts actually can be different based on the industry, but also based on the needs of the business. So if I own a restaurant, for example, and you own a clinic, right, a lab, basically my chart of accounts might be different from your chart of accounts, because your needs are different than the one that I have. Okay, so to create this chart of accounts, you would first organize your accounts into specific categories, then further break your organization down into relevant sub accounts. So that's important to really think about it from a flexibility point of view, but also from a structuring point of view. So every account category is assigned a range of numbers that are used to track individual accounts. For instance, if you have a category for business asset accounts, your organization might look like this. I'm going to put this on the screen. You can have asset checking accounts, okay, number 1005, asset savings account, number 1025. Again, this is a hypothesis, and you have assets, money market account, 1020. Okay, but again, this is just an example. You can really choose the kind of organization that makes sense for your particular industry, but also company. Now, you would follow the systems for all the account categories that you have. Common categories include assets, liability, equity, revenue, and expense accounts. So you have 5 main account categories that you can choose to actually set up your chart of accounts. But again, those 5 categories are applicable to all industries, by the way. The fourth law of success for small business accounting is actually the determination of your fiscal year. So number one, you want to open a small business bank account. Number two, you want to choose a small business, you want to choose an accounting method. Number three, you want to set up a chart of accounts. Number four, you want to determine your fiscal year. Now, the fiscal year doesn't have to end on December 31st. Okay, so your fiscal year can end on September 3rd, on March 24th, on February 5th. It doesn't really matter. It does matter. The date does matter. This has to do the fiscal year has to do more with your operations, with your business operations, with your revenue cycle, and also how you want to structure your business. One thing for sure, a fiscal year is 12 consecutive months for which accounting activities is recorded. So accounting activity is recorded. So small business owner, as a small business owner, you can decide when your fiscal year begins and ends. The only rule is that it must be 12 consecutive months. So if you say, listen, my year is ending on January 31st, then your fiscal year will start February 1st and end January 31st of the following year. Okay, so that's one of those things where you have to really just make sure that you are consistent. So you might choose to start your fiscal year on July 1st and end it on June 30th or the following year, or you can choose a more traditional approach and have your fiscal year follow the standard calendar year, depending on what works best for your business. Now, a lot of small businesses would like just to have the standard approach. In other words, you start on January 1st and you end on December 31st. It's a lot easier. It's a lot. It requires less paperwork. So if that works for you, then go for it as well. Not a problem. One thing I want to say also is that if you operate a seasonal business, for instance, then you may choose to begin your fiscal year at the beginning or end of your peak sales season. That way, you are able to match your revenue cycle with your tax cycle. That way, you can save a lot of cash when it comes to, and you can save yourself also a lot of reconciliation entries. So let me give you some extras here. So, I just shared with you the 4 laws of success for small business accounting, and when it comes to the extras, I want to share with you is that basic bookkeeping and accounting for small business owners revolves around a core set of tasks, all of which are designed to help you keep track of where your funds are going. The most important bookkeeping practices include tracking small business expenses, recording transactions accurately, documenting and filing receipts, and reconciling bank statements. Okay, so that's important. So when you think about financial statements for business, for small businesses, you are talking about primarily three reports. You might have there are 4, but in practice, most businesses only use 3. So you have income statement, you have balance sheet, and you have cash flow statements. The 4th one is the statement of owner's equity. But a lot of small businesses don't have that sort of extra equity layer. Okay, so that's why. But one thing I want to say here is that if you are already using an accounting software program for small businesses, you may be able to generate those 3 statements automatically. You don't have to do it. You don't have to do things yourself. Okay, and one thing I want to say also is that using the software, you can also structure your chart of accounts. Now, there are actually an important element I want to really focus on a little bit here. You have to think about tax considerations. So if you are thinking about the laws of success for small business accounting, you have to pay attention to taxes, because everybody got to pay their fair share of taxes, whether you are a business or you are an individual. So running a small business means you have to file a tax return and pay what you owe, if anything, to the IRS. Businesses will need to pay federal and state taxes, as well as any local taxes that may apply. So you do have a lot of small business taxes at the federal level. So you have income tax, self-employment tax, estimated tax. you have employer tax, you have excise tax, among other things. Okay, yeah, your business structure, by the way, determines which types of tax you may pay. Remember that if you have employees, you will need to account for a payroll tax. If you are unsure about your tax obligations, you may want to talk to a professional accountant or tax experts for advice. So that's important. And small businesses that are actually required to pay estimated quarterly taxes but fail to do so may be assessed a penalty by the IRS, and the agency is not really it's really strict when it comes to that penalty. So when it comes to the laws of success for small business accounting, you need to understand that again, you can really do those things yourself, like opening a small business bank account, choosing an accounting method, set up a chart of accounts, determining your fiscal year. You can do you can go the DIY route, or you can just use software to really automate the whole process. Okay, if you're comfortable about your accounting, your business accounting capabilities, you can do things yourself. If not, just use software to really streamline the whole process for you. Okay, I want to quickly before we close to this conversation, I want to really talk about deducting business expenses. If you are trying to really reduce your expenses, to boost your revenue, boost your income, you want to make sure that you are really deducting the right expenses. Okay, so the IRS, and that's a good thing, the IRS allows you as a business owner to deduct different expenses, and deductions reduce your taxable income for the year. And some of the expenses that you may deduct include business meals, business travel, business insurance, home office expenses, utilities and rent for business premises, inventory purchases, vehicle purchases or eligible vehicle expenses, employee benefits, retirement plan contributions. So that's really cool. Remember that you need to keep track of all of those expenses and maintain the proper records for each one. Okay, and keeping accurate records serves two purposes. It ensures that you are deducting the right amount when you file your taxes, and it also allows you to prove your deductions should your business be selected for a tax audit. And also, you do have software and tools for small businesses, small business accounting, by the way. So software programs, apps, and tools can save your business time and potentially money if you are able to ensure more accurate accounting. So using a software program can also eliminate the need to retain a full-time accountant, which can add actually to certain business expenses. Additionally, accounting software can help you to create cost predictions, run forecasts to determine the potential return on business investments, manage inventory, manage payroll, send and receive invoices, and track accounts payable and receivable. So that's really good. You can also outsource things to a third party. You can outsource, let's say, your accounting, your small business accounting, to a CPA, to an accounting service, to a bookkeeping service, or you can just hire. You can hire a team or just one accountant to take care of your accounting starting this year. So as a recap into this conversation, I just spoke to you about the laws of success for small business accounting. I gave you the foundation, the laws of success, the extras, and now the recap. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.